Why do countries import goods even if it results in a trade deficit? The reasons are efficiency, quality, and variety. Some goods are cheaper to produce abroad due to lower labor costs or abundant resources. Take your favorite sneakers, for example. They might be designed in one country, made in another, and use materials from yet another. This global supply chain reduces costs and ensures access to top quality materials. Importing also gives consumers access to a broader range of goods. Without imports, choices would be limited to locally made products. Imports encourage competition, driving innovation, and offering more options for consumers. The ongoing trade relationship between the United States and China is a prime example of how trade deficits work in the real world. The United States has run a trade deficit with China for many years, importing a vast array of goods from electronics to clothing. However, this deficit doesn't necessarily mean the United States is losing out. American consumers benefit from lower priced goods, while U.S. companies gain access to a massive consumer market in China. Furthermore, China often invests a significant portion of its earnings from trade back into the United States economy, buying U.S. Treasury bonds and investing in American businesses. This flow of capital back into the United States helps to finance government spending and support economic growth. Contrary to popular belief, running a trade deficit isn't always a sign of economic weakness. In fact, it can often be a sign of strength. Strong economies, well, they tend to import more because their consumers have higher purchasing power and demand a wider variety of goods and services. Moreover, countries with trade deficits often attract significant foreign investment. When foreign companies see a strong and growing economy, they're more likely to invest in it, building factories, creating jobs, and promoting overall economic growth. Conversely, countries with large trade surpluses may not be better off. If a country is exporting far more than it imports, it could indicate weak domestic demand or even an overdependence on exports, which honestly makes its economy more vulnerable to global economic shocks. Trade deficits often become, well, a hot-button political issue. Politicians might exploit fears about job losses and economic decline to push for protectionist policies, like tariffs or quotas. However, it's crucial to separate fact from fiction here. While, yes, some jobs may be lost due to competition from imports, trade also creates new jobs in sectors like logistics, transportation, and services. Additionally, protectionist policies can harm consumers by raising prices and limiting choices. Instead of focusing solely on trade deficits, policymakers should prioritize policies that enhance overall economic competitiveness. Things like investing in education, infrastructure, and technological innovation. It's really important to remember that trade is not some kind of zero-sum game where one country wins at the expense of another. Instead, it's a mutually beneficial exchange that allows countries to specialize in what they do best. This leads to increased efficiency, innovation, and overall economic growth. When we take a step back and focus on the bigger picture, we can see that trade creates a global flow of goods, services, and ideas. This interconnectedness helps raise living standards for people all over the world. So, the next time you hear about a trade deficit, remember, it's not necessarily a cause for alarm. While it's definitely important to monitor trade balances, we need to move beyond these simplistic narratives that view trade as a win-lose proposition. By understanding the complexities of international trade and its impact on economic growth, job creation, and consumer welfare, we can engage in more informed and productive discussions. And ultimately, we can figure out how to harness the power of trade for the benefit of everyone. In hopes that this was crystal crystal clear, let's bring it all together. Trade isn't just about numbers on a spreadsheet or who's winning or losing. It's about creating a system where resources, skills, and opportunities flow seamlessly across borders. It's about collaboration, not competition. When we understand that the trade deficit is just one piece of a much larger puzzle, we can focus on the broader picture, a world connected through shared prosperity, innovation, and growth. This is the essence of global trade, a network of mutual benefit that transcends boundaries and builds bridges between nations. So, let's challenge outdated ideas and embrace a more nuanced, balanced perspective on trade. Because at the end of the day, it's not about deficits or surpluses, it's about the possibilities that arise when we work together as a global community.